G'day traders, Sam here from Trade2Prospa to give you another crypto perspective update. Been sick for a few days, 3-4 days now. Sorry about that, but that's why I haven't been doing charts and other stuff. And anyway, let's begin. Always thought of this stuff here as a bearish structure, not a bullish structure, because we had higher lows and lower highs all intercepting. So ideally, we want to see an uptrend this way. So this rising wedge was problematic for bullish structure. Pretty evident of that, and taking a short there was a great opportunity. And I recall doing a video doing that, talking about this bearish structure, and the target was roughly that level, and it surpassed it. Okay, this is playing two structures. This was the potentially most people thought that could be a Adam and Eve potentially, like but not the case. This is not a bullish structure. It does look like accumulation, but it looks bearish. It's struggling, and the fact that this was struggling here, I was bearish from the beginning, and you know that. And so once we saw this type of movement, accumulation wise, it's just not bullish. Anyway, so what we're looking at now is we had this key level here where the selling climax was, and then we had this level of support as well. So we got this, and we had the rejection based on this level here. So when we apply Fibonacci to this structure, so let's do one Fibonacci. We select our bottom and we select our top. I use that as reference, and then I did another one. We've got two overlaying. So when we look closer, it does look like a bit of an accumulation, but however, this is a dangerous structure when we look at it. Yep. You can say a symmetrical triangle and a breakdown to the downside. Do you want to say that it could be like this? Yeah, maybe. Let's see if we change the log settings. That could be a case. And then we had a breakout, fake out. So is this a fake out? Well, it aligns with our spring scenario of our white coffee accumulation. So if we do this, it still plays a role. However, we can see this is a main resistance. This could be another level over here, and this is that's a neckline that we failed to keep. So this was a bit of a swing trade here on top with a strong wick. If we were to apply some approach to this, if we were to do this, add our Fibonacci to it with our reference points, we can see the 618 level, this middle section, as pretty much a strong resistance right there. So we're getting the rejection. And can we use this as a means for resistance as well? Yes, it fits it. So at the moment, we're at a strong resistance level. And maybe, can we use this? No, we can't. That doesn't make any sense. However, this was a small swing trade. I made a long entry here with the group, and took some profit there, and considering taking profit here. I'm not really interested in making a lot of money from this move because it's bearish, and I just don't think it's going to go really high. But if it does, if it breaks above this level, then it's going to show that we have some levels to consider shorting. First level is this, consider to short. The second level corresponds to this level here. We might get that to this level here as well. So we might just put the range from there to there, I would think. Yeah, so that range there, between the two fibs there and there. And obviously the third, which is up here with these. If I put in the Wyckoff structure, and if I get it, and align it with it, you can see that LP, well, we can see two things. Automatic response level initially is there. We had a secondary test, and we had a big upthrust. I'm not going to get there. And then we pull back. So our upthrust was maybe here. Yep. Automatic response. That's our level. We didn't get none of this. So we pulled back. We didn't get none of that. And we didn't get none of this. And I don't believe we're going to do all this. No. I think we're here at the moment. So we just counted on the bottoms. That was a secondary test. And that was our spring. So this is a mini bear flag. What structure it takes, don't know. But if this is the case where it makes finds support here and does go up here, this is going to be a bit of a resistance. And we can see either finding a short there, depending on the structure, on the way it does it. We might find a way of entering that one. And if it was to get above this level, we'll look at entering this one as well. Pretty sure shorting there or shorting there. Those are the two levels I'm pretty interested in. Can it make it to that level? No, I don't think so. But if it does, I'm looking at these two fibs, and the worst case scenario, if it's ever bullish, above that, which I doubt it, is these, the 618 and the 0.5. So this is the maximum it could probably do. And to me, it just really depends how it gets there. It's got to look very strong for me to change my mind. It cannot be something like this. It cannot be something like that. That'll be a better structure in nature. And however, this might be an opportunity to squeeze the shorts out if there is a possibility for that. In the meantime, there is nothing that we can rely on that makes sense. Maybe that might be the case. But yeah, I'm looking from that perspective that there is no bullish opportunity. So these are the two levels I have that I'm really interested in to find the short. If it was to get the, so what's happening now is, let's just do this for a sec. And I've seen this happen in the past where you have a trend. Our trend is, we had an acceleration, we got a downtrend, we get some relief, and then we continue on with the trend. Yep, this is a fake out position. The fact that we got this potential channel, give or take a bit, not even, doesn't even fit. It just seems to be a very structured in nature, so this might just be it, and just come down, and then fizzle further down, pretty much. Very structured in nature. So if that was to happen, this will continue to struggle, and then we will look for our next level, maybe there if it comes down. What's happening is this could be a grind line as well. So if this get a rejection there, likely to come back down here. However, that could be a double bottom as well. Spring can be a double test, so it's not going to be easy. But so there's not going to be easy trades in this range if it comes back down. This could also be a double bottom and then up again. So it really depends on many things. Ugly area to trade. We want to see some strong moves to the upside, finding shorting positions and do the local trade, and pretty much look for a continuation pattern of some sort. What kind of patterns can we look for? I would imagine a rising wedge of some sort, maybe like that. Who knows? We might get something like that, where we just maybe even flatter. and just come down like that. Yep. This might just be our level, and we just get we might get another swing trade opportunity there in the making. So just keep an eye on that, and join our our group, and I might call that out if it does happen. Looking at other charts, I'm looking at the SP 500. This is the 200 daily moving averages at a Fibonacci level. That's very strong resistance, and we also have that trend line. So SP 500 looking for a reversal pattern here of some sort, and then look and make. And if that was to happen, I could see Bitcoin as well, not doing much highs. If it's correlating to the SP 500, we are at a strong resistance point, and if we get another rejection here, it's likely that we accelerate further down for the SP 500 and the main markets. That is probably come early next year. We're going to see the beginning of capitulation, and Bitcoin is probably a signal that that's happening. You can see the SP 500 moving up, and Bitcoin isn't. So the correlation has broken, and the Dixie is pretty much not is Dixie is doing a good job with the SP 500, but the Dixie is not really correlating with the Bitcoin. So I'm going to leave it at that, guys. Please give me a like and share. Hopefully this helps you out. I'm still not feeling well, so don't expect too much from me. Talk to you soon. Cheers.